So, I think we need to talk. It happened. Okay, AMC stock up 63% to close out after hours trading. It happened. There you go, my bulls. There you go. Now, lots of serious things we need to talk about here in this video. AMC stock hit a high of $8.76 in after hours upon the first 10, 15-ish minutes upon the judge ruling in favor of AMC stockholders. This is so significant, I really don't want to rush it. And I want to give you a full scope of what's going on. And stay tuned for follow-up videos later on today, getting into this a little bit more, because there's so many potential outcomes here. There's so much money potentially to be made. I just don't think we can cover it all in one video. So we're going to dive straight into it. I hope you're ready. And sure as shit, I hope you're excited. So let's get into it. First and foremost, I want to say, if you want to come trade with us live in real time, every time we make a trade, or I specifically make a trade, link down below in the description of this video. This has been a moment we have been waiting for. And hopefully, even if you guys have some options, those paid out well. Now, the main kind of thesis that I've had came true. Everyone is so negative that it's probably not gonna, be negative. Now, I did think this conversion was gonna go through. So I was not 100%, I guess, correct on this. But my overall logic was, either way, you get a sell the rumor, buy the news event, no matter if the conversion went through or not, because everyone was so negative. Indeed, the courts denied this, and it is hitting everywhere. MarketWatch, Barron's, Yahoo Finance, Bloomberg Law News, Fox Business, Yahoo Finance twice. I mean, this is everywhere. Okay. Now, what happened? The judge said the settlement cannot be approved as submitted. That's according to Bloomberg. And that's really all. They didn't provide too much clarity. Just said, yeah, this is not going to be able to go through. So AMC did not get the green light to do the reverse split, to raise a bunch of capital. It just did not happen. Now, quote, at this juncture, the court's only task is to approve or reject the proposed settlement, wrote in the ruling obtained by Bloomberg Law. The focus of the settlement is on the claims presented in this case. The court cannot address issues that do not pertain to the fairness of the settlement. Such issues raised by AMC shareholders include theories about synthetic shares, Wall Street corruption, dark pool trading, insider trading, and RICO violations, and a request for a share count. The ruling continued. The court's role is limited to considering settlement-specific issues, like the strength of the plaintiff's claims, the consideration the class would receive, and the scope of the release the class would give in exchange for that consideration. To cut to the chase, the settlement cannot be approved as submitted. Couple ways this could play out. Either it's dead in the water, in which this 63% rally does suggest, or AMC somehow comes back with a much better deal. Much, much better deal. Because, I mean, to potentially get diluted hundreds of percents, to pay out $100 million total to shareholders is like a slap in the face. Essentially what they said here. So, odds are, it's probably dead in the water. Right, that's probably the overall kind of gist you can get out of this. Now, as far as AMC stock, gosh, I hope you've been watching these videos so far. Let's take a look at Ortex. Give everyone a little bit of a refresher. First, I want to start with the option activity. So the option activity, today alone, or Friday, You've seen 60 trades on AMC worth $37 million with a positive order value of 2%. On Thursday, you had 47 orders totaling $47 million with a positive order value of 0%. 287 orders for the past week worth $170 million with a positive order value of 1%. The put-to-call ratio has never been this bearish. You are literally at an all-time high for the amount of puts relative to calls that you are seeing on AMC stock. It's at an all-time high. You thought January, when AMC was going bankrupt and went through a short squeeze, January of 2021 was, there was a lot of put buyers or a lot of shorts, not even close to what we're seeing now. June of 2021, when AMC 10x'd for, some would say a lack of a good reason. Yeah, not even close. You have 2 to 3 times as many puts versus calls that are currently on AMC. Now, why is this such a beautiful thing for everyone that is hoping for a massive short squeeze? Well, let me tell you. Hedge funds and institutions are short up to their gizzards. Just these fucking gizzards, they're so short. They're up to here, right? But what a good hedge fund or institution would typically do, one that is in line with a risk management strategy, is buy options to hedge out that risk. Well, nobody did that. They just got blown out of their positions. Blown out. You thought you ever got blown out on a position? Oh, these guys just got blown out on a whole new level because they were not hedged. They were solely short. And they've been flooding money into options like nobody's business. Trust fund babies spending money they can't afford. That's these hedge funds and these bearish options in these puts. Consider this. The last minute, talk about bad timing. The last minute of trading today, literal the last minute, you had 2 trades, $6 puts worth $224,000, completely went to zero. Another $218,000 trade completely went to zero. An August 18th $10 put worth $8.14 million. They paid $6.47. They instantly lost over 50% on this trade. Instantly lost $4 million. Likely more than that once we actually do start trading this next week. July 28th, $9 put worth $6 million. They paid $5 for this. They, again, lost about 50% instantaneously. So not only did shorts and bears lose massively just after this ruling on the... Make sure I'm recording. You'd be surprised how many times that happens. I make a whole video and it's not even recording. They were all short. Let's just cut to the chase. They were all short in shares as well as options. There was no hedging at all. There was no consideration. This was 100% not priced into AMC stock. And that's why you got that knee-jerk reaction. So what this really means from here is they're completely fucked. The cost to borrow fees as well. Yeah, that doesn't help them. 1,000% still. 1,050% for the cost to borrow max. I mean, every which way you look, it screams you're screwed if you're short in AMC right now. And I think that's a big problem, at least for the shorts. Now, ultimately, AMC stock is at $7.18 per share. If you have some trades on this, if you're still diamond handing all your, shares, congratulations. You won the first battle. There's going to be more battles to come. And I'm sure it'll be rocky. Give it some time. But, I mean, they are just so underwater that without a severe degree of manipulation and funneling of trades, maybe from the lit exchanges to the dark pools, there's no stopping this train at this point. This could be the actual Moass this time around. Now, let me just remind everyone, for those of you guys that are unfamiliar, like I said, the cost to borrow fees, 1,000%. So, I mean, you're not even getting relief there. You're getting fucked on your options, fucked on your short position, fucked on your cost to borrow fees. Anywhere you want to look, you're just utterly getting screwed harder than the government is screwing you. Yeah, those shorts, yeah. No comparison. Now, you have the highest short interest you've seen throughout all of this. Again, something I've been pointing out, you have 144 million shares currently sold short. If apes still own 80% of the float, that means you could have a short interest over 100%. 150% is where those numbers would actually hash out at. It's hard to tell how many apes still own their stock, or if some apes sold or whatnot. But you could be over 100% short interest, and could be higher than that. So, I mean, 28%, that's sizable. That's great in terms of a short squeeze. It could be a lot worse than that. Now, again, the option buyers. It's worse for the option buyers here. It's been so negative for weeks, and they all just got blown up at the same time. There was no consideration of hedging for risk. What happens when there is no consideration for hedging risk? Well, if that goes against you, you get blown up. And even, I mean, to some of the trades we've talked about recently, yesterday, I made a video and said I think a court ruling is imminent. It could be coming, I said, on Friday. And I mean, I guess not in regular trading, but it happened in after hours. You seen trades over 5 million on the regular. This trade yesterday that expired today, well, it was worth $17 million. It was a $10 put. They lost over 50%. They lost almost $10 million on this trade alone. There's just no there's just no recovering from that. You just walk away from whatever position you have left, and you just leave, right? So odds are AMC stock continues to rally from here and probably gets much more aggressive. Now, if you don't have any options trades on this, and you maybe don't have too much positioning in AMC, well, fear not. I'm sure, like we seen today in after hours, the stock hit $8.76. You're going to go through a short squeeze at this point, in my personal opinion. Hopefully, we do open at about the same price, about $7 per share. That would be cool, because just like what happened in June of 2021, AMC stock actually opened at like $30, and it just went higher and higher throughout the rest of the day. So sure, if you didn't have calls at $4 per share, yeah, you could have made more. But if AMC rallies to 15 or 20, I mean, that could happen in a day or two. And if you can get a position when the stock's at $7, you're going to make thousands of percents on those trades. So again, link down below in the description of this video if you guys want to be a part of the trading that we do. So this was obviously the first reaction. Again, there's a couple ways this could still play out. This could be dead in the water, in which this reaction makes it look like, or there could be a sweet settlement that's a lot bigger and a lot better, maybe $1 billion, that maybe would get approved by the courts. And I mean, at that point, the settlement would outweigh a lot of potential dilution you get. And that's obviously not what I'm expecting right now. Like, I would say it's dead in the water. And I mean, just look. I don't think we really have to elaborate too much on it. I think it's pretty clear. They were caught with their pants down. Like, literally, there was no hedging. None. This is the worst case scenario that could have happened for the hedge funds. And ultimately, I think it gets worse for them from here. So that's my perspective. Those are some of the things you need to know. As far as where AMC is going from here, long story short, if you didn't catch what I just said, you could rally to 15 or 20 in the course of a day and a half, 2 days. You could rally higher than that with the degree of shorts we're seeing, with the amount of people that were caught offsides here. That's my opinion. I'll provide a little bit more clarity, look at some of the technical levels, go over what potentially I plan to do here or plan to trade or how I'm looking at this in the next video. So stay tuned for that one. That's going to do it for this video. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Get yourself free stock with Webull, as well as come join the trading community if you have not done so already. Come join, try it out. If you don't like it, if it's not something for you, then you can go on your own way, right? It's like $20 a month. It's like nothing. Try it if you guys want to be a part of it. If not, well, thank you for watching. Enjoy the rest of your day, and I will see you in the next one.